individual that works in California, whether you have a business, whether you work individually, whether you work for a specific employer, whether you are an independent consultant, whether you are the spouse of a person that works, you're required to file taxes. And so you're required to file federal taxes and you're required to file state taxes within the state of California. And so the purpose is that we must follow the law. This earthly law is that we have to file taxes. Other purposes are, apart from being in compliance with the law, these funds are government use programs. They're used for programs and services. And so you play a specific part, whether you know it, indirectly in funding certain services. And we know that we all benefit as families, because if you look at, for example, the Department of Education, that our children goes to school, some of these monies funds these programs. It also funds definitely your Social Security, your Medicare insurance, so many different things. It also determines your eligibility for paying taxes and for obtaining refunds from the US government. And then fourth, it helps individuals to track their earnings and their deductions. Can you move to the other slide, Pastor? Income tax filing in the state of California is managed by the California Franchise Tax Board. And you can go and find, Google it, you can go online, you can look up California Franchise Tax Board, and it's going to show you so many different categories. It has so many different information for you to go by. It follows a progressive tax system. And what I mean by a progressive tax system is that there is a basis that moves from 1% to 13.3%, depending on your status and your category upon which you're filing. There are also filing categories that impact your tax rates and your deductions. And so we know that there are certain other states that you don't even have to file income taxes. But in the state of California, it will impact the category that you're under. And then there are differences between your federal taxes and your state taxes. And so the difference between your federal taxes and your state taxes is that you're filing for federal at a higher level. And that higher level encompasses totally what the government has under a structure. First comes federal at the top, and then comes state, and then comes local. And so that is the hierarchy of which we are filing under within the state of California. Okay, your filing requirements and the minimum threshold. So who must file taxes within the state of California? I'm thinking that I'm a person that moves around, but it looks like I have to stay still. So who must file taxes? If you are a resident of California, you have a job that's giving you income, or you're doing something where you're acquiring income, you will be falling under one of those categories of paying taxes. If you are a part-year resident, meaning that you have not lived the entire year in California, you may still be required to file taxes. And get this, a lot of people do not understand this, that even if you are a non-resident in California, but you're earning income, you are required to file taxes. A lot of people just bypass this because they're going to say, well, I don't have any documents. Well, I don't have this. Well, I don't have that. There are ways and means of getting information so that you can file taxes. For example, you may not be a citizen of the United States of America. you may not be a permanent resident in the United States of America. But if you have a working permit that is authorized, even though you are not a citizen or a permanent resident, you're required to file taxes. If you have a ITIN number, individual tax identification number, you are required to file taxes. Again, a lot of people within this United States, if they only have an ITIN number, they think that they are not supposed to file taxes. You have a requirement to file taxes, and it also comes with many different advantages for you to file taxes.
I have a question.
Yes, sir.
So if say you're not legal, right? You're not a resident, you're not a citizen, but you are getting income. Does it make sense? Because the thing with tax is when you're paying it, you're losing money. When if you're a non-resident and you file for the taxes, do you get a tax return, or they say, well, you're not a citizen, you're not a resident, you're not getting any tax return? How does that work?
Okay, can everybody online hear the question? If you can hear the question, let me know. And you can unmute yourself if you cannot hear the question. But the question was that if you are not a resident and if you, yeah?
Tanya had a question.
Okay, so the question was that if you're not a resident, if you're not a citizen, if you do not have documents and you're making income, can you file taxes? Is it beneficial for you to file taxes? And the answer to that is yes. The answer to that is most certainly. And you, depending on your category of taxes that you're filing, yes, you may get a return, or no, you may not get a return. It depends on your filing status. Does that answer your question?
I think so. But I'll ask later. But this ITIN, I want to get a better understanding of this ITIN business, but later.
Sounds good. Do we have another question online? Okay. So there are thresholds, 2024, and each year you have a certain amount of threshold that you file under. So for the year 2024, the threshold for filing a single filer, which basically means that you're not married and you're making money in the state of California, somewhere or the other, the threshold is $14,600. As long as you fall in that threshold, you file taxes. Married filing jointly, it is $29,200. Head of household is $21,900. And married filing separately, as long as you have income of that 5, you're supposed to file. And then,
Whoa.
each year, this threshold, it does not remain the same. It is adjusted based on inflation. And I want to dive a little bit more into what these threshold means.
Before you go to the threshold, I have a question.
Yes,
In
sir.
reference to what we're talking about right here now. The single or married filing jointly.
Can I get you?
The last one was-
Married. You could come here.
Yeah, I'll get closer.
You could go in front of the camera.
No, I'll pose front of the married filing jointly. There's a small difference there in terms of what your earnings need to be to be married and filing jointly. But let's say that you're married, but you do not want to file jointly. Is there a option for that? That's my question.
Mm.
Okay, thank you for that question. The question was, if you're married and you file jointly, do you have an option to file married filing separately? The answer to that is yes, certainly. And somewhere before the end of this session, I will be delving more into that of, the pros and cons of married filing jointly or married filing separately. So as we can, is there a question online?
No, no.
Okay.
Wait, just tell them they could unmute and ask the question.
Yes, you're able to unmute and ask your question if you have a question, or you can raise your hand. Pastor is monitoring the Zoom. So under the category of single, as long as you are under the age of 65 and you have income of $14,600, you file taxes. If you're over the age of 65 and you're single and you've made $16,550 and above, you need to file your taxes. If you are head of a household, meaning specifically that you're not married, but you have a dependent and you're over 65, and you're making at least $23,850, you will need to file your taxes. Married filing jointly, that's both spouses. If you're under the age of 65 and you've made $29,200, then you qualify to file your taxes as married filing jointly. If both of you are over the age of 65 and you're making a combined $32,100 minimum or above, then you need to file your taxes. Now, if you're married and one of your spouse is over the age of 65 and the other is under the age of 65, but you're making income of $30,650 and above, you file your taxes. There's another category of filing taxes that I want to address under the separate categories, and that is filing as an independent contractor. And what that means is you do not get a W-2 from an employer or someone that you've worked with, but you get a 1099. So when you get a W-2, you are working for a company. You have an employer. When you're an independent contractor, there are different levels of independent contractor. It basically means that you are more controlling your work environment and not an employer. So you will be able to get a 1099. Widows, who's specifically what it means, a widow. If you had a spouse, husband or wife, and that person died, and you have a dependent child, meaning that that child is under a certain age and the child has to be dependent on you, and you're under 65, if you have $29,200 in income, then you file your taxes. There are several factors that your categories would fall under. One of those factors are, number one, your age. The second factor is your income. And when I say income, it's your gross income. I'm not talking about you make $10,000 and then you pay taxes of $4,000 and you have $6,000 remaining. That's your net income. Your gross income of that $10,000. So your filing status and your categories will depend on your gross income also. And then again, your adjusted income, it is going to be adjusted annually by the government based on the current inflation rate.
You have to tell me when the
Next slide, please. Filing options in California. There are many different ways of filing your income taxes in California.
Is that the right slide?
Filing options.
This is filing status category.
Pros and cons. I think I just passed filing status categories. That's where I spoke about the single, okay. The other one is filing options in California. So there are many different ways you can file in California. Let me start with the most outdated way. The most outdated way is getting paper and pen and filing your income taxes. You can, but it is very much outdated. It also has its disadvantages because you have to put it in the mail by a certain time, and the mail is snail mail. That is basically getting your taxes into the post office by the 15th of April. And so that can cause a lot of problems. It cannot reach the IRS because it's diverted for some other reason or the other. And so it has so many disadvantages of doing that. I don't really know of much people doing the paper filing anymore, but I want to say from most people are doing the e-filing options, and that is the option that is most recommended, and it is faster. There are so many different software and so many different packages that are out there today. So many different packages and softwares that are being developed as we speak to address the different tax needs and the different codes that are being updated. And so the IRS and the state of California have softwares that you can utilize to file electronically. Again, a lot of these softwares are free, and they're free based on certain categories. Number one, you can actually go on the IRS website and file your taxes electronically. You have to be eligible to do that, and that is specifically based on your income. So your adjusted gross income, as long as it is $84,000 or less, you can go on the IRS website and file that free. Now, there are advantages and disadvantages of that. If you don't know what you're doing, don't go and do it. You have to be well versed in understanding the tax laws, understanding how to file, how to prepare for you to go and do that. You don't want to make errors on your taxes, or you want to minimize the errors that you make on your taxes. Because once the IRS receives those taxes that you have filed, they may make a decision based on a mistake that you have done, and that can be detrimental to you. Some of the IRS forms are literally forms that are fillable, and you can fill it out electronically, regardless of your income level. You can go online to irs.gov, and you will find, if you want to find a 1040, if you want to find a 1099-C form, it is going to be there, and you could fill it out electronically. Again, it's not the best thing to do if you do not understand how to prepare your taxes. There are numbers of commercial tax software. TurboTax is one of the most popular ones. All the companies that does taxes, the H&R Block and so many, they all have their electronic software for them to do taxes. Nobody's in the paper and pen lining anymore. And so it is most expedient. It is definitely faster. And I want to recommend that if you are doing your taxes in this way, have a tax preparer review your taxes, because again, it can be very detrimental to someone that files with errors or a mistake. The IRS is not going to take into consideration that it can prompt different things. It can cause you to be assessed, and then they say, oh, okay, this is the wrong amount, you're supposed to pay this amount. And they will not ask the question. All they will do is to send you a form and say you need to pay so much amount of money more based on what they're seeing on that form. And that is why I recommend for you to have a tax preparer to review your taxes. Another reason why it is always best to make sure you know which software you are using. You want to ensure that that software is updated every single year, and it has to be updated for the new tax codes that have come into effect. If you do not have a software that is updated every year, that can put you in some potential danger. You are actually risking being assessed by the IRS, which can trigger an audit. And when they trigger an audit, I think everybody, I don't know if everybody understands an audit, but the IRS is basically saying, I need you to bring in this document, I need you to bring in this, and you're proving yourself then. And then, of course, as I mentioned before, consult your tax professionals. And again, if you don't have somebody that is qualified and certified to do this, definitely consult a CPA or a tax agent. And then there are volunteer tax assistance programs in the state of California also. There are nonprofit organizations that assist with taxes. These again comes with your qualification and whether you are eligible for it. For the most part, these nonprofit organizations and voluntary tax assistance programs, they will kind of determine your eligibility based on different things such as your income. If you have a low to moderate income, they will consider that. You can't go making $1 million and asking them to do your taxes free. Another eligibility part would be if you are disabled in some manner or the other, that can qualify you, or if you have limited proficiency in speaking the language of the nation, which would be English. You have a question, sir?
Yes, ma'am. I could talk hard enough, I think.
Okay.
You make references to or income, one's income. Is there a difference between one's income or what one gets, let's say, from Social Security?
Okay, so when I make reference to income, as long as you are getting in money, I'm referring to that as an income. Whether it's from Social Security, whether it is from the county office, whether it's from that income that you're getting. Does that make sense?
Makes sense.
Okay. I think my helper has gone. But I wanted to move on to the other tax slide. And just for the time being, Your federal taxes and your state taxes, California state taxes, for the most part, California state taxes aligns with the federal guidelines of the Internal Revenue Services. There are different things that can affect it from it not being aligning together, and that's basically credits. So there may be credits that the California state is offering, but the Internal Revenue Service at the federal level may not offer those same credits. And again, it aligns with the time process. Taxes are due for the most part on the 15th of April at 11:59 p.m. This now can be affected by the state and by the federal government, the IRS, meaning that if you are in a natural disaster area, then that can affect the timing of when your taxes are required to be filed. Currently, because of all the wildfires and everything that happened, right now, the county of Los Angeles, California, their tax deadline has been pushed back to October 15th. 2025. So as long as you fall under the affected areas in LA County, your taxes have already been pushed back to October 2025. Sorry? That means that the deadline for the taxes, you have to file your taxes, is April 15th. For people that live in the LA County area affected by natural disasters, it has been pushed back to October the 15th. So, yeah, as long as you're in the county of Los Angeles, your taxes have been pushed back. You do not have to go by the deadline of April 15th. Am I saying wait? As soon as you can get it done, get it done. There are advantages of getting that done. Can I have the next slide? Pros and cons of different filing categories. Each status affects your deductions, your credits, and your tax rate. So when I say each category, I mean a person filing single, a person filing head of household, a person married filing jointly, or a couple married filing jointly, a person filing married but filing separately, and an independent contractor. These are different categories. Each category affects your deductions, your credits, and your tax rate. Yes, sir.
So I have another question, right? So if you have a green card, for example, but you're in Belize, right? You're not making US money, you're making Belize money. You still have to file because you have a green card?
That depends on your residency status. The United States have residency status, and what that means is that you must be living in the United States for a certain period of time within a specific year.
So that's my point. But what if you got the green card, then you went back home, you haven't been back, but you still have the green card, you still have to file even though you're not living in the US?
That may take you out of the residency status category. Yes, that may definitely take you, and that comes with its own disadvantages. And so I don't want to tap into the immigration part.
We'll get to that.
We are planning on doing a session on immigration, but you want to be very careful about that. And residency status within the state of California is 6 months. Yes, ma'am.
Will you touch during the presentation, will you touch on the advantage and disadvantage of married shopping jointly
And I will elaborate some more by the end. Okay. Yes. So also the pros and cons of filing in the specific categories are you would need to choose the best category that can reduce your tax liability. And specifically, as Mrs. Gentle just asked, we will touch on that because that is one of the categories that you will decide on if you're married, making that decision to file married filing jointly or married filing separately. That is going to have a big change in your tax liability. So definitely coming. And then the other pros and cons of different filing categories is for the independent contractors. Think about it. You're an independent contractor. For the most part, you're working for yourself. That does not negate you from paying into Social Security and Medicare, Medicaid. And so, even when you file as an independent contractor, you're not getting that tax withholding every month as an employee. But when you file your taxes, you will still be required at that specific time to pay in your Social Security and your Medicaid. Yes, ma'am.
Even if you're retired,
Sorry, you mentioned
suppose
that
you're
again.
retired,
Uh-huh.
but still working independent, have an independent, a self-employed income,
Mm-hmm.
but you're now retired, already getting Social Security.
Mm-hmm.
How will that affect?
It depends on it depends on your category of when you say that you're still working and you're retired. And I want to kind of put that into context because it's based on you could say that I have reached the age of 65 or 62, so I am retired. But are you still working? That does not, but are you still working? Exactly. So if you're still working as an independent contractor, you're still working, you're supposed to be paying. You're supposed to be paying into that. Now, if you are retired from if you're retired from an employer, you're no longer getting a W-2, but you're getting in your Social Security because you're retired. That then is based on whatever additional income you're getting in to place you into that category. So you may be getting your Social Security. Say you're getting nothing else, then there's nothing for you to pay into. You're only getting your retirement. But if you are working and getting additional income, that income can trigger you into paying your Social Security and your Medicaid. Does that help?
So look, right? But then wouldn't it help you if you're an independent contractor because you could charge gas and the rest of those things or no?
Certainly, that's why it depends on your income.
Oh, all right, whatever.
It definitely depends on your income, and we'll definitely get to that portion somewhere down at the end. Do we have any questions
I have a
online?
question. I have a question.
Okay, sure.
All right, I'm an independent contractor. I receive a 1099, but you stated that we're supposed to, or we can pay our social security and medical or whatever when we file our taxes because my payments are tax free. So how do you go about paying your social security and medical?
It is automatically charged when you're filing your taxes, and they take out 15.3%. Sorry?
No, okay, so I don't have to personally go and pay the social security, it is automatically deducted.
It's automatically deducted as long as you're an independent contractor when you are filing. That 15.3% is taken out.
So what? Sorry. So does it make sense to pay it before filing time, or just leave it for when you're filing? if you're an independent contractor, when we're working, is automatically deducted. Is there a benefit of just, if you're an independent contractor, let me pay this thing every month, or there's no benefit to that?
Well, according to the law, you are supposed to pay quarterly as an independent contractor. Now, if you are not paying quarterly as an independent contractor, when you file, you will still have to pay.
Oh,
Does that make sense?
You, I didn't hear you just now. What happened?
just repeat it.
Okay, I can repeat. So what I just told Pastor's question was, does it make sense to pay before you file? And I told him, according to the law, if you're an independent contractor, you are supposed to pay quarterly as an independent contractor. You're supposed to pay your taxes quarterly. If you do not pay quarterly, when you're filing your annual taxes, it is going to be charged. Pastor asked, is that an advantage? Yes, it's an advantage to pay quarterly. Why? There's an additional penalty when you're filing your taxes that you didn't pay. So a lot of people do not understand that, okay, when I'm filing, these are the things and these are how the softwares are built in, that there is a penalty for, working all year and not filing quarterly. But it is built in that penalty is being charged to you. The same way it is built in that 15.3% of your income is going to be taxed. Yes. Yes, ma'am.
Question. Okay, let's say I am already getting Social Security, but I am also a self-employed person getting an income from that self-employed business. I'm also getting a Social Security. How will paying quarterly or at the end of the year when it's deducted, how will that affect going forward my Social Security? In other words, will that add to my Social Security since I'm now paying into it?
So if I heard you right, and I'm clarifying this part, you were working for an employer.
Yes.
You are retired, but you are going back to working for that employer. Is that what you're saying?
No.
Okay.
You start your own business.
You're making your own
Okay,
income.
okay. Yes. Let's say I've always been self-employed. Let's say that.
Mm-hmm.
And then I reached retirement age.
Mhm.
I was paying into Social Security.
Mm-hmm.
I reached retirement age, and I filed for my Social Security income.
Mm-hmm.
But I continued to work that self-employment.
You're not technically retired. You're not retired, and so
But
if
I'm already getting Social Security.
you're already getting Social Security, and again, that can prompt you to an audit because you filed retirement. You said you're retired, but you're making income. So therefore, let me do the short answer. You're still required to pay based on your revenue. That's Social Security. That's the short
So,
answer.
but it should get complicated, and watch this, right? I'm retired, I'm getting $880 every month from Social Security.
Mm-hmm.
And then I move around, I make like $800 a month in
Mm-hmm.
addition to the thing. And then out of that 800 quarterly, I have to still pay them Social Security. So shouldn't they be paying me more Social Security than the 880? Because now I continue to pay the Social Security when I should have stopped.
Again, it depends on your income. Within the state of California, your Social Security is not taxed. Within the state of California, your Social Security is not taxed. It depends on the amount of income that you're making apart from your Social
So
Security.
a lot of money is a problem. Oh,
Yeah.
Above a certain amount.
Yes.
Oh.
They allow
There's
you
a
to-
threshold.
there's a threshold.
Yes.
It also seems as though considerations like that have to be addressed on an individual
Individual.
basis.
Yes, that's what I mentioned in the beginning.
All right.
That this is specifically, it's general information, but
Yeah.
it affects in an individual person. It affects each and every person individually. And so your situation may not be my situation. And so what may affect you may not affect me because we don't fall under the same category.
Hence, individually, we still need a professional.
Yes.
She did say
To
that.
look over
Yes.
Still looking
what
over,
we're
yeah.
doing,
Yes.
to address the individual situation.
Yes, ma'am.
Alright.
So I think what's the one that is there the differences between federal and
Oh,
California?
yeah, pros and cons.
Okay, pros and cons. Okay, I think I'd finished that part that I was explaining. An independent contractor having to pay their self-employment taxes. Am I right?
Yeah.
Okay. So the next one is the difference between federal and California taxes. The first one is, and I just went ahead of myself, no tax. Your Social Security benefits in California are not taxed.
Thank you, Lord.
So that's the short. So that's one difference. Now, at the federal level, that's a different story. Federal level, it's taxed. The state of California does not tax Social Security.
Is that new?
So, no. Mhm. And then there are different deduction rules when it comes to the federal government and when it comes to the state government. So there are specific certain deductions that will not apply to you at the federal level and certain deductions that will not apply at the state level. It's a vast amount of deductions. Again, it depends on each person's situation. And in truth, California also does not conform to all of the federal regulations. Likewise, the federal regulations is not fully adhering to all of California's federal regulation. Whichever state you are in, you want to make sure that whomever is doing your taxes, it may sound like it's as easy as ABC. It may sound that it's as easy as jumping on an electronic software and following instructions. But the regulations are different. And the other thing about regulations, it changes from year to year. And so you have to be up to date individual as a person if you're doing your own taxes. Now, if you're not doing your own taxes, that tax preparer at least is required to know a qualified tax preparer is required to know what the federal regulations are, the changes that occurred from one year to the next year, and so forth. Next slide, please. I think I mentioned this before. I'm just going to go over it. The standard tax deadline for each and every year at the federal level and everything remaining constant for the state, it is April 15th at 11:59 p.m. That's where you're going to see
Don't forget.
They look like this.
wherever you are filing. Wherever you're filing. If you're in California, it's 11:59 Pacific time. If you're in New York, it's 11:59 Eastern time.
That's important.
It is April 15th, 11:59 p.m.
Well, all right.
Don't wait for the last minute. And that can be dangerous because if you end up having to pay, if you have a tax liability, then filing late has its own issues. When you file late, it comes with its own fees and penalties. As I mentioned earlier, California has been deemed a state that has been flagged with natural disasters. So the IRS, the federal government, and the state government have already decided that if you're living in LA County, Los Angeles County, your tax deadline has been extended to October 15th. And that is for 2025 for your FY24, for your 2024 taxes. This will not may not remain the same next year. This is only for this year.
So while in the past you had to file for an extension in order to get that,
Now it's automatic.
now you don't, now it's just automatic.
Just for
If you're living in the county of Los Angeles,
It's
for
automatic.
everyone else, you file an extension, you can file an extension, and you will get an extension up to October 15th. But yes, now you don't have to file an extension if you live in Los Angeles County. It's automatic and how are they going to know? Your address. You're going to know exactly where you fall under and where you live. And then, yes, it is the disaster relief extension. And so LA County is one of those that got that extension.